Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 2nd of November. I'm Daniel Lam, your host for the podcast. Well, yesterday was my first day back at the office, and the FAQ that I've been getting from my colleagues is, when are we going to see better days in the Hang Seng Index? Now, Steve spoke about Hong Kong and China equities back on the 25th of October, after the sharp 6% one-day sell-off post the end of the 20th National People's Congress. Since then, the index hit an intraday low around 14,600 before rebounding sharply yesterday. Is this going to continue? Well, from the perspective of technical analysis, there have been some encouraging signs. So first of all, the volume over the last 1.5 weeks has been nearly 3 times the normal level of volume in the second half of this year. Volume is very useful because it shows the level of activities. That means in the area between 14,600 to 16,000, there has been some heavy change of hands in shares. Possibly, strong hands have been taking over from weaker hands around these levels. Now, if we dig deeper, we had very weak days of opening at the highs and closing at the lows last Wednesday and Thursday. But note that there was relatively little volume on these days, suggesting that the selling power was relatively mild on these bearish days. Overall, it seems we are in an accumulation phase for the Hang Seng Index, with buyers adding exposure. They are waiting to reap the rewards upon positive catalysts, such as earnings season this month, i.e., if these earnings were to be better than expectations, and also the Central Economic Work Conference in December this year. The Chinese authorities may be able to put forth concrete actions to strengthen growth and to rejuvenate the Chinese nation on all fronts along the Chinese path to modernization. So what are the risk factors out there? They would include A, US midterm elections this month, where China would be one of the topics at stake, and also B, the continued assessment of the auditing of Chinese companies listed in the US. For now, we're keeping China as a core holding within the Asia ex-Japan region, which is in turn preferred within equities. In the short term, though, tactical opportunities do exist for Chinese equities, given the light positioning and cheap valuation. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.